Visa just reported their Q4 results, and we'll take a look at why it was business as usual over at the payment network giant. As we take a look at their Q4 numbers, you'll see this company, we expect them to come in with a beat, and that's exactly what they continue to do. We'll take a look at the valuation. We'll also take a look at the news surrounding the fact that they're hiking their dividend up by roughly 13%. We'll get into the all-important free cash flow. If there's one slide that you should look at when analyzing Visa, that is their free cash flow side. We'll take a look at that for you. And then when we get over to the technicals, this one has been channeling higher, trading closer to the top end of the range, still might have a couple of dollars to the upside. And we'll take a look at it from a technical perspective, where you will probably find some resistance in shares of Visa. Hey guys, hope you're doing well out there. One of my favorite companies to look at, and that is Visa Incorporated. Similar to its peer MasterCard, they sort of have a duopoly in the payment processing, payment networking side of the business. And so really this is a company that's a classic inflation hedge, also just tends to do well as the overall economy continues to grow. And so year to date, you're up just 8% with Visa. So you have seen some underperformance in shares of this one. Even over the past 1 year, you're not up that much. But if you stretch it out over a long period of time, with the dividends that you continue to get with this one, if you perhaps reinvest those in Visa, you're over the past 10 years, performance is probably pretty solid. And that's why Visa is one of those companies you continue to hold, not one you look to generally trade. Now, revenues came in at $9.62 billion, good for 11.7% growth year over year, beating estimates by $130 million. On the non-GAAP EPS side, beating estimates by 13 cents, coming in with $2.71. So we got that double beat that we're so accustomed to seeing over at Visa. In terms of the upcoming Q1 guidance, they also provide full year 2025 guidance, considering this was the end of their fiscal 2024. So for the upcoming Q1, they're anticipating high single-digit revenue growth and then low double-digit earnings growth. So taking a look at the revenue side, Wall Street had this one pegged at basically low double-digit to maybe high single-digit on the top line, and then like Visa said, low double-digit growth expected for the earnings per share for the upcoming quarter. Similar story for the full year. You're expecting high to low double-digit growth on the top line, and then high end of low double-digit, right around 13 or 14% growth on the earnings per share side. So you like to see the earnings outstrip the growth on the revenue. Tells us that this company continues to drive a bit more operating efficiencies in their business. They also continue to do that buyback that we so like to see over at Visa. Now, they also do plan to cut roughly 1,400 jobs. This report coming out earlier today, and that coming from the Wall Street Journal. And so it seems like most of these jobs are likely to be in the engineering, or at least in the tech side of the business. Some of the jobs being cut will also be on the contractor side of the business as well. So certainly people that will be affected by this, we absolutely wish nothing but the best for them. Hopefully they can land on their feet. But seems like the CFO over at Visa took a look at this report. They also considered the guidance for the upcoming year, and they looked and saw where they were able to maybe drive a bit more efficiencies, control a bit more of the costs. And they probably noticed the tech and the engineering side probably look to be a bit more inflated. Now, what they'll do with that savings that they plan to realize from those 1,400 jobs is probably increase the dividend by roughly 13%, up to 59 cents a share. That's on a quarterly basis. So now your yield is looking closer to 0.84%. And so this is one of the reasons why you continue to hold shares of Visa if you do own this payment network, is because they're able to control those costs, and they look to try to pass those on to you, the shareholder, either in the form of a dividend or, as we'll see, in the form of a share buyback. This company really doesn't retain onto too many earnings simply because they don't have a lot of R&D, a lot of CapEx that they need to spend on. And so a lot of that net income, or free cash flow, I should say, gets spit out to you, the shareholder, in the form of either dividends or buybacks. Now, in terms of the fiscal fourth quarter summary, we saw revenues up nearly 12% on a holistic basis. The other revenue side of the business is growing much faster, closer to 30%. What I also like to see is the fact that this company is having to do less client incentives. You see just 6% growth on the client incentive side in order to generate nearly 8 to 9% growth on the processing revenue. So that's good to see, having to spend less on the client incentive side. And that translates into roughly 14% net income growth, as your operating expenses only growing at 7%. So you're growing your revenues faster than your operating expenses, allowing you to grow net income by 14%. And then that buyback helps the EPS grow closer to 17%. All things looking consistent over with Visa, as you have payments volume cross-border in Europe and also excluding Europe continue to move higher, and then the number of transactions, the number of cards outstanding with Visa continue to also just chug along very consistently, continue to move higher. Again, one of the reasons why you pay a premium for a name like this is because you get the consistency with a business model like this. And so because of that, you're paying close to a 28, 27 times a forward earnings multiple. Not overly egregious, certainly not overly cheap in my opinion either. From a balance sheet perspective, I'd say all things looking consistent, roughly $12 billion in cash and equivalents, another, call it $34 billion in total current assets. You do have a fair amount of long-term debt to the tune of roughly $20 billion, but I think considering how flush with cash this company is, also how flush with free cash flow this company is, yeah, that long-term debt, nothing to be overly concerned about in my opinion. Now, the free cash flow is the most important thing over at Visa, at least in my opinion. Over the last 4 quarters, $20 billion is what you generate in operating cash flows. And like we said, not a whole lot of capex, not a whole lot of spending needs to happen to continue to run this business. And so you generate close to $18.7 billion in free cash flow over the trailing 12 months. And yeah, nearly all of that and more is returned to you in the form of a $17 billion buyback and $4.2 billion in dividends paid. Again, one of the reasons why this company continues to increase their dividends, simply because they have the room to, and they have no really other use for that cash that they consistently continue to generate. And so I fully expect Visa to continue to also do their buybacks heading into next year, and then continue to up that dividend as they see fit. Now, from a technical perspective, you are still making a series of higher highs and higher lows. Anytime you come near the bottom end of this range, I say close to the 260s, maybe even 270s, that is your time to step in and pick up shares of Visa. We had that opportunity earlier on in the year. You've since seen this company continue to move higher. Probably don't have a whole lot of room to the upside, but you will probably meet resistance near to $90 a share. If you continue to move higher, yeah, you probably have a lot of clear airspace above this one to push higher, maybe as high as $300 a share. But what I anticipate is this one coming up to the 290s, getting rejected, and then continuing to channel in this upwards pattern. This is one of those companies that's super easy to analyze, really simple to even understand from a technical perspective. Anytime it comes down to the lower end of the channel, that is your time to step in and move on shares of Visa. Let me know your thoughts on this one in the comment section below. Nothing out of the ordinary with this company, which is, I think, one of the reasons why you continue to hold it and sleep easy at night, simply because how consistent their business really is. It's been a long day here on the channel. Thanks so much for watching, and I'll catch you guys in the next video.